Let's understand in detail what separates or differentiate a balance sheet from profit and loss account. So on the left side, you will see components. Then the profit and loss account and balance sheet will do a quick comparison for you to understand what is the purpose of each account in the financial accounting. So if you see the type, the profit and loss account is an account. It requires double entry system to be practiced, which says every debit must have equal and corresponding credit. So it follows the accounting principles in order to have a proper record. Whereas, unlike the case of profit and loss account, balance sheet is a statement. You can prepare the way you want it, keeping the assets on the left side, liabilities on the right side, in a vertical form or a horizontal form, the way you want it. But while recording the profit and loss account, presenting the profit and loss account, it is considered as an account, purely a accounting statement, and balance sheet is considered purely a statement. Okay. The period. The profit and loss account is ascertained for a specific period, financial period, which normally from January to December. And if you consider it could be from June to May or March to April, depending on the jurisdiction tax requirement. But it is for a specific period of 1 year, whereas balance sheet will provide entire history of the business. So all the transactions which are coming from day one of the business to the date of the report is considered as balance sheet. What is the objective? The objective of preparing the profit and loss account is to identify what is the profit and loss for that specific period. Whereas a balance sheet provides the financial position of the company, it provides the health of your business, it gives insights of what are your total assets and what is your total liabilities. If you guys remember, we discussed about net worth. How do you identify net worth? By summing up your assets minus your total liabilities. That will be your net worth. So this is a true financial position. That is the reason why all the stakeholders like banks, government ask for a balance sheet for disclosure in order to identify what is the status of your business. If you talk about inclusions, profit and loss account includes basically the expenses which are recurring in nature, which comes again and again. For example, salaries to your employees. You have to pay every month salaries to employee, or some countries have weekly pay, some countries have daily pay. Similarly, you will have to pay rent to your landlord on monthly basis, or you will have to pay uh, operation charges, marketing subscription, IT cost. All these costs are actually recurring in nature. That is why it comes in profit and loss account for a specific period. Whereas balance sheet has non-recurring items. For example, let's say machinery. You will buy machinery once, maybe in 10 years or 20 years, or items which have got long-term life comes in balance sheet.